Good afternoon, this is Bob Ichino along with Mike Arnold from Path Trading Partners. It is April 23rd. This is a weekend update Path Chat covering the FX markets. So the results are 90 some odd percent in. Looks like the runoff election in France is going to be Marine Le Pen and Emmanuel Macron. So we've got that out of the way. That is the most market positive outcome that anyone was looking for, because the polls right now, at least the latest polls, had Macron absolutely destroying Le Pen in a runoff. Now we'll see if that changes. Le Pen did a lot better than people thought she was going to do. Just a quick thing from Goldman Sachs that I saw as I was preparing to do this Path Chat. Some of the things that Goldman Sachs thinks will happen with the markets based off of this outcome. You can see the gap up. The charts that we're using here, their server just opened, so you can see the gap up right there, somewhere in that 108 area or so. I'm sure Mike will talk about it. We know that the initial high off of the real cash FX open was a lot higher than that, but that's where it is right now. Goldman Sachs thinks that the equity markets is already largely priced in this outcome. They expect these results to generate some relief for the FTSE MIB. If you don't know what that is, that's the 40 most liquid stocks in the Italian stock market. French and Italian banks, and very minor relief for the CAC 40, which is the French stock market. They also expect 10-year and Bund spreads to tighten up a little bit. And Goldman's FX analysis suggests that a sizable decrease to close to 0% in the probability that investors will assign to Miss Le Pen becoming president or any break up of the euro area. So a splitting of the euro, according to Goldman Sachs, is now at a 0% probability. Let me get to the economic calendar. Obviously, the most important thing on that calendar were the French elections, and that is already over. But at about 6:01 Central Time, 7:01 Eastern Time, you've got the UK's right move housing prices year over year. They're expected to be up 2.3%. Moving on to Monday, April 24th. German IFO business climate, expectations, and current assessment, all at 3 a.m. Central Time, 4 a.m. Eastern Time. For the business climate, they're looking for 112.4 from a last of 112.3. Expectations are looking for 105.9 versus a last of 105.7. And current assessment, 119.2 versus a last of 119.3. These are all numbers for April. Tuesday, April 25th, 3:30 a.m. Central Time, 4:30 Eastern. We've got some minor UK public finances data, not really that important. But at 8 a.m. Central Time, 9 a.m. Eastern Time, we've got a slew of U.S. housing numbers. We've got the month-over-month house price index, and then we've got the Case-Shiller U.S. home prices index year over year. Case-Shiller does not have an estimate right now. It was 5.87% last time up. Expected to be about that. It's pretty much unchanged. And the housing prices index month over month for February is expected to have risen 0.3%. We've also got new home sales an hour later, 9 Central, 10 Eastern. That's expected to have fallen 1.4%. Same time, U.S. consumer confidence for April, expected to be 122.5. That would be the first fall in a while. Last was 125.6. Later in the evening, about 8:30 Central Time, 9:30 Eastern, that's PM, we've got consumer price data out of Australia. We've got the index year over year, quarter over quarter, and we've got the core year over year, quarter over quarter. We'll just go over the year over year. It's supposed to be at 2.2% from 1.5% last. And the year over year core is supposed to be 1.8 versus 1.6% last. Then just before midnight, all activity index in Japan month over month expected to have risen 0.6% versus 0.1% last time. Wednesday, April 26th, Royal Bank of Australia's Governor John Lowe is giving a speech. There's no time listed for that. At 1 a.m. in Switzerland, you've got the consumption indicator for March. No estimate for that. 6 a.m. in the U.S., that's Central Time. We've got mortgage applications for April. No estimate on that, but last was down 1.8%. That's for the week of April 21st, not the month of April. 7:30 Central, 8:30 Eastern Time, Canadian retail sales for February expected to have risen at a 0.2% clip versus 2.2% last. Then we've, of course, got the Department of Energy, EIA crude inventories. Then again in the evening, 6:50 Central Time, 7:50 Eastern Time, Japanese foreign bond buying and Japanese foreign stocks buying. Thursday, April 27th, we get a pretty heavy data day, a lot of high priority data. We've got the Bank of Japan's 10-year yield target, still at 0%, expected to be at 0%. And then we've got Japan's policy balance rate decision. It's at negative 10 basis points right now. It's expected to remain at negative 10 basis points, essentially a Japanese central bank meeting with the results of that meeting. They'll also release their monetary policy statement and their outlook report. That's going to be sometime around midnight Central Time. 1 a.m. Central Time, Swiss trade balance, no estimate on that. Moving on to 6:45 a.m. Central, 7:45 Eastern Time, we've got the European Central Bank rate decision. That's expected to be unchanged. We've also got their asset purchase target. That's going to be watched very closely. It was at 80 billion last euros. It's expected to be 60 billion euros this time. One of the things that was interesting about the French election is that there was a lot of talk that the ECB was ready to inject liquidity in case there was a market-moving event with this election. So there is a possibility, depending on what happens in the next few days, that the ECB's asset purchase target changes from what's expected. It's been telegraphed, but you never know. By the way, another central bank that was talking about being full ready to inject liquidity to defend their currency was the Swiss National Bank. So you need to keep an eye on those, and you need to keep an eye on any sort of speeches or comments out of those two central banks. We've also got the German Consumer Price Index month over month and year over year. That'll be at 7 a.m. Central Time, 8 a.m. Eastern Time. The month over month is supposed to actually be down 0.1%, and the year over year is supposed to be at 1.9%. It was 1.6% last. Half an hour later, 7:30 Central, 8:30 Eastern, you've got U.S. dollar advanced goods trade balance supposed to be down 65.5 billion versus down 64.8 billion last. We've got wholesale inventories for March, durable goods for March, and durable goods ex transportation. March wholesale inventories is supposed to be up 0.3% versus up 0.4% last. Durable goods orders is supposed to be up 1.3% versus an up 1.8% last. And the ex transportation number is supposed to be up 0.5. That would be unchanged from last. Remember, those are all March numbers. April 22nd jobless claims will be coming out as well. Expected to be at 242,000. Continuing claims supposed to drop below 2 million. U.S. pending home sales will be coming out then at 9 Central, 10 Eastern Time. That's a year-over-year March number. They were down 2.4% last. Then at 6:01 p.m., strange time for this, but 6:01 p.m. Central Time, 7:01 Eastern Time, you've got the UK's GfK Consumer Confidence Survey. That's for April, expected to be down 7 versus down 6 last. Then you've got a bunch of jobs numbers and price numbers out of Japan. Those will be at 6:30 Central Time, 7:30 Eastern Time. We've got the Japanese jobless rate, supposed to be at 2.9% versus 2.8% last. Household spending year over year is supposed to be down 0.5%. It was down 3.8% last. Consumer Price Index year over year for Japan is supposed to come out unchanged at 0.3%. Then you've got a bunch of specialty ones where it's ex-fresh food and energy, and so on. Those don't matter as much. But you've also got Japanese industrial production and large retail sales. Those are for March. Those are both year over year numbers. Down 1% on the large retailer's sales versus down 2.7% last. And then the industrial production year over year expected to come out up 4% versus up 4.7% last. Finally, on Friday, another pretty data-heavy day, Friday, April 28th is. Start off with Japanese housing starts year over year, supposed to be down 2.7%. That'll be somewhere around midnight. We've also got construction orders year over year, No estimate on that. 12:30 a.m. Central Time, 1:30 a.m. Eastern Time. We've got French gross domestic product. I think that would matter in light of the elections. 0.9% versus 1.1% last. So the expectation is 0.9%. At that same time, the Swiss National Bank will release its Q1 currency allocation. Again, matters more in light of the elections. Then you've got Euro German retail sales year over year expected to come out at up 2.2%. Significant because it was down 2.1% last time. Then at 3 a.m., Swiss National Bank's Jordan is giving a speech. We'll be watching that. 3:30 Central Time, 4:30 Eastern Time, sterling gross domestic product. Gross domestic product in the UK. Year over year is the important one. It's estimated to be up 2.3% versus 1.9% last. Eurozone Consumer Price Index and Core Consumer Price Index, both year over year estimates for April. That's 4 a.m. Central, 5 a.m. Eastern Time. The core is supposed to be up 1% versus 0.7 last. And the headline, 1.8% versus 1.5% last. Get to 7:30 Central Time, 8:30 Eastern Time. Employment Cost Index in the U.S. expected to rise 1/10 to 0.6 from 0.5 last. Same time, Canadian gross domestic product year over year and month over month for February. 2.6% on the year over year versus 2.3 last. And then we've got U.S. GDP, first quarter. It's the first quarter, the first release of the first quarter. Looking to come in at 1.1% versus 2.1 last. This will obviously be one of the more significant things coming out in a pretty data-heavy end of the week. Core personal consumption expenditure, quarter over quarter, we'll be looking at that as well. That's an inflation gauge. Came out at up 1.3% last. It's supposed to be 2% this time. So we'll be watching that pretty closely as well for inflation. Then at 8:45 Central, 9:45 Eastern, Chicago Purchasing Managers Index. 15 minutes later, University of Michigan Consumer Confidence, April final. Now the Purchasing Managers Index is estimated at 56.7 versus 57.7 last. And the consumer confidence is not expected to change at 98. Then, of course, we've got Baker Hughes rig counts at noon. That would be it. Let me turn it over to Mike. You can see the euro trading in front of you. Let's see what Mike says about it. Mike, it's all yours.
Okay, thank you very much, Bob. Euro, big gap up. Just to our, you can see the green GAN level, the 108.81 on the screen, which is roughly where it opened. It pulled back to our significant level, 108.78. Now it's rallying up. Next area of resistance, 109.03, which is a major defining point. On a move higher, next level up is 109.33, very key level. If we pull back and get below our significant level, support is 108.64. The next level of support's not down until 108.29. Now, remember earlier when we got a move and a close above this trend line right here, we're expected a full move to unfold, which was the 108.64, and we got that full move on this gap. We just switch over to a weekly chart to put this into perspective. So here is that 109.03 level. If we get above there, then the next major level, if the euro really continues to rally, is 110.93, which is that red line there. We'll be able to update more key levels once this day finishes unfolding with the election news and we get some new levels. We can put up some GAN retracement levels and everything else. They just can't be put up yet. Switching over to the pound, holding very strong. This 25 level is, this 25 GAN level is very key, and it's holding above there and basing sideways. That historically means we're going to re-break out. We'll test probably this trend line at some point, which is coming in right now if we were to test it over the next day or so, around 128.72 to 80. If we break through that, next level up is 129 to 129.06. Pulling back, The 128.06 is some minor support and then very major support around 127.71. If that is broken and the 25% gain level is violated, the next pullback level is about the 127.30, where we also have a rising 8 coming in. US dollar, Japanese yen, big gap up. You can see we had a 110.49 level on here. The highs so far on this gap up was 110.46.9. So pretty accurate with that prior breakdown zone of the clear path. Right now, we just dropped below our significant level at 110.24. If we continue to pull back, we're looking for 109.97, where we have a flat 21 and a 25% gain level. Right below that, we have a rising 200, which is 109.91. If all that is broken, the next level down is not till the 109.39. Rally back up, watch for that 110.49 level, followed by the 110.89 to 90 level. Then once that is exceeded, the 111.17 area. Over to the Swiss. US dollar, Swiss franc pair. Gap down below the defining point. On further down move, we're watching for support 99.02. Then we have a small little cluster right around the 98.89 level. Then if that's violated, we're looking at 98.68, and then we have the full end of the clear path right around 98.54. On a move back up, resistance 99.23. Then we're looking for a retest of the defining point, which is 99.40. Then we have a minor cluster at 99.47 to 50. And if that's broken, then we're looking for a possible rally back up to 99.60. Over to the Aussie, gap up, pulling back right now. This is the Aussie US dollar pair, pulling back. Next area of support, 75.50, where we have a flat 200 and a gain level. Slightly below that, 75.46. So that 46 to 50 is going to be key on this pullback if it fills that gap. And then on a bigger move lower, we're looking about 75.24 to 28 in here. On a rally back up, 75.76 is some minor resistance. Then we have a flattening 50, 78.80, 75.80. And then we have 75.85. And our next major significant level is 75.93. If all that's broken, you can watch for a test of 76.02, which is essentially the 76 level. Over to the CAD. CAD, not much anything going on. Slight gap down from Friday. This is the US dollar, Canadian dollar pair. On a continued pullback, 134.64 is some support, followed by 134.49 and then 134.41. If that 134.41 is broken, you can watch for a possible retest of the rising 8 at 134.29. On a move back higher, resistance at the 134.81, followed by the 134.87. If that levels are sort of range is broken, watch for 135.06, followed by 135.20 as next key levels higher. Finally, Mexican peso. This is US dollar Mexican peso pair. Gap lower, right now trading at the 87.5 gain level, 1864.34. If it continues to rally, minor resistance 1868.79. Then the next level above that's 1874.37, followed by the 1879.53 area. If it turns back around and heads lower, then we're looking for support at 1854.27, followed by the 1845.46 level, which is down by these lows in the new defining point. That's all we have for you. Back to you, Bob.
Thank you, Mike. Should be an exciting week. Cheers, everybody. Keep checking out the Path Chats, and don't forget to subscribe to the videos if you like what we're doing. Cheers, everyone. Talk to you next time.